We're now joined in the studio by Toby Mahoney from Urban Money, who's going to give us some helpful hints for her first home buyers. Hello, Toby. Thank you so much for joining us. Obviously, we've heard lots of anecdotal evidence about how challenging it is for people to get their foot in the door. We need to pick your brain. Firstly, what size of deposit do people realistically need to start out with?
Yeah, that's a great question. So most first home buyers need to have at least the genuine bank likes to see 5% savings. But on top of that, they've got to allow for stamp duty, solicitors' costs, everything like that. So we're looking at roughly about an 8% of the purchase price to have sitting aside. Ideally, look, we'd love it to be above 80%, have an 80% lend, so have your 25% sort of savings. But given the market the way that it is at the moment, there's not a chance that a lot of first home buyers are going to have that sort of amount of money unless it's coming from Bank of Mum and Dad.
Bank of Mum and Dad. What actually constitutes genuine savings when people do go to look at, what you can afford for a home loan?
Yeah, so there's a few things that can happen, can be genuine savings. So it was based off how long the money is actually sitting in your bank account for and hopefully accumulating across that time as well. So normally that 3-month period is what we're actually looking for at that time.
Okay. A trap for young players, perhaps the good old buy now, pay later schemes for the latest top or TV. How damaging can that be?
Look, it can be really damaging. So they'll look at that as actual your living expenses. So they'll actually add that in to your living expenses across there. So it's not just if your limit, like with the credit card, your limit is that's based off a percentage. It's actually the repayments that you're paying out with your afterpay and the like. So if you're paying out $100 a week in buy now, pay later things, they're going to actually add that in, which make a significant difference to your borrowing power.
Yeah, right. And to help with people who may not have Bank of Mum and Dad, what sort of government assistance is available?
So there's a few things about at the moment. So we're looking at, there's the Home Share, which is a Tasmanian government initiative where the government will actually buy a percentage of your property, which then sort of saves in repayments and everything for you as well. There's the federal government stuff, which is the first home loan deposit scheme. Now, that's a mouthful. I've got to get used to that. But they have that across. There's some existing property spots still available in that scheme, and they've also got one there available for new homes as well. And along with, obviously, the first home buyers scheme for brand new houses, and for existing houses, we're getting discounts across stamp duty as well.
And so for a first home buyer who is struggling with all of these things going on, they can come and see you for some help. What sort of advice would you be giving them?
Yeah, absolutely. Look, we see ourselves as a bit of a coach and mentor in this space. So it's very much coming in, having those conversations early and, and making sure that we're on the right path even prior to start looking.
Okay, wonderful. Thank you for your insights today. Thank goodness I'm not
Thanks.
a first home buyer anymore.
I know.
Thank you so much for that, Toby.